Hello, folks. Brandon Chapman with you today. It is a Monday, November 18th, 2024. And we're going to talk today about a golden opportunity in the market. And yes, we're talking about gold. If we look at the performance of the various sectors today in the S&P 500, gold is leading up 1.9%, or GLD specifically. We'll talk about what's going on behind the scenes. One of the things that I track are pulses or things going on behind the scenes that lead to potential movement. And this may be just the beginning in GLD or gold stocks here in the near term. We'll talk about some of those pre-move pulses I'm seeing. And we'll talk about also kind of this pre-move market pulse that led to the last few days of correction. We'll see whether or not we're close to a bottom or it's still time to be a little bit reserved as we're still searching for that low to occur. All right, so let's kick things off. We'll start with this pre-move market pulse. We're going to focus on the S&P 500. As you look at the price action today, the SPX, you'll notice today's high versus Friday's high were lower. The lows are getting higher. This is what's referred to as an inside day. Last week, I talked about the idea that we may be poised for a 5 to 10% correction in the market. This was on Thursday before the market broke. We drew these lines basically outlining where the support and resistance is, and if we break certain levels, we're going to move to the next level. Well, look, we end up finishing below the support on Thursday, and the next level, we had a little vacuum here. The next level is, of course, 585. We could draw levels as we go down. There was a significant print of 580. Down here at 571, we take out 568. We could see a much bigger downside move. A 10% move lower, 10% move lower is 60 points. Could have us back at 540. Right now, we're about 3% of the way from peak to Friday's low, at a close to 3% move down. It still looks like we still have some room to run to the downside. Now, what do we see that said, hey, the downside risks are being priced in? One of the things that I like to look at is the VIX, and not just the VIX. But what we saw, and something I talked about in this video back on a couple Mondays ago before the election, was the idea is that the VIX should get crushed, right? This is like in earnings, and the VIX should fall dramatically. We talked about 15, maybe a 12 handle on the VIX. But the question we wanted to see was if the market if the market goes up as the VIX declines, what kind of punch are we going to get out of it? And what you saw is the VIX continued to decline going into, let's say, the 13th. The S&P 500, we'll go SPY here. The S&P 500 into the 13th was right there, right? So the last couple of days of VIX selling really did not produce any sort of movement to the upside in the S&P 500. And again, we just started to see the impact of just selling VIX began to come off. And we also saw something else. I also saw something else. We talked about it, was the idea that, look, as we look at the 3-month volatility against 1-month volatility, what I normally look for is some ratio above 1.2. So I don't care about the candles on here. I'm just looking at the ratio of 3-month to 1-month VIX. Intraday here, we did pop up to about 1.19. What that means is that the 3-month VIX was 19% higher than the 30-day VIX. What this is suggesting that the institutions that are trading the S&P options and other volatility products are suggesting there was a significant potential increase in the VIX coming up in the next several weeks. Well, what that means for the market is that the VIX goes up, the S&P generally goes down. And so we also saw that Skew was elevated. So again, elevated means north of 130. We were trading up here close to about 140. So I'll just bring up a line chart so you can see it. In the last few days, we've actually ticked up. And on Friday, on a selling day, Skew went up, which is very unusual. So what we have here is that Skew representative of hedging activity. We're seeing very high degrees of hedging. And as the market has kind of pulled back here, hedging activity's actually increased. Well, look, if you think the market's going to bounce, shouldn't hedging activity be diminish? No, yes, it should, right? But the idea is that the hedging activity is not diminishing. We'll see what happens with Skew today. It's an after hours. It's one data point. We may pop even up higher as the VIX ended up declining. And what normally happens as the VIX goes down, we see hedging activity usually picks up. And so today will be kind of a key point Friday was a key point. We saw Skew went up as hedges were being put on, even as the market was selling. What that suggests is that for the S&P 500, we're not exactly at lows yet. Doesn't mean that we can't find lows here, right? In the near term, we could certainly see a little bit of a bounce up here. Maybe we get up to 59.40. Maybe we just blow out and just take off and do the less likely scenario. Maybe go to 6,200. But as of right now, what we can see is that institutions are guarded, they're hedged, they've increased their hedging even as the market declined at the end of last week. And today we'll see what happens. But it's certainly a point where right now you want to be a little cautious. Now, that doesn't mean you can't be bullish. Doesn't mean you can't find opportunities. I mean, certainly one I talked about last week at the end of the week, and something we saw the previous week developing was uranium plays. It's had a nice day today. CCJ's up 4.3%. We had UEC. We had UUU on Friday. I talked about during my session because of these pre-move pulses that are going on behind the scenes that may help create big movement. And so the idea is that, well, how does this translate to other products? Looking at gold. So gold was one that last week, and what we specifically looked at was some significant trades going on behind the scenes in GDXJ, and that was last Tuesday. So we're kind of down here near lows. And all of a sudden today, we finally see a breakout. Volume was rather significant today, and we may see further upside. Now, let's come back to what we're seeing over here. Gold outperformed every equity sector in the S&P 500. It significantly outperformed the S&P 500 at 0.4%. And so what this is indicative of is the fact that the dollar index is rather extended. It's way the heck up here. You can see the dollar index pull back today. That's because the euro started to gain a little bit of strength against the dollar. We could see a couple or a few days of this, but we also might see, if the market remains relatively weak and underperforming, is that gold may outperform both the dollar and the S&P 500. And so as we look at GLD as a proxy for gold, the idea is that GLD was up 1.9% today. Now, how much do you expect out of this? I mean, if we get kind of a routine bounce, normally you make up about one third to 2/3 of the prior decline. What that means is that gold could go to GLD could go to 245, 247, maybe even 250. The strength of the move today in GLD may suggest we may have a chance of getting a bit higher, as the dollar is way overbought at this stage, and we're starting to see a little bit of a breakdown today. But here's the deal. The dollar may strengthen against the euro and still weaken against gold, and gold may still outperform the S&P 500. But if gold's up 1.9% today, the dollar was actually down maybe 1.9%. So when you look at the S&P only garnering 0.4% gain, what that means is if the dollar perks up at all, and if the dollar perks up at all, absent the dollar's weakness, the S&P might be down something close to 1.5% today. So there's much more internal weakness going on than is really being observed just by looking at the percentages, only because the dollar had a bad day today. It fell out of bed, and the S&P was only able to garner 0.4%. Gold went up 1.9%. Now, how does this translate to gold-related stocks? GDX, for example, outperformed up 4.25%. As we look at the fib retracement, I drew this last week. I'll activate it and bring it down a little bit further here. But GDX, where's this potential? Well, we look at around 38.60, $40, maybe 41. So we're looking at this kind of upside potential in the near term. And boy, if we continue to see weakness in the dollar, gold may have a much, much bigger move, and gold stocks may likely outperform gold in that period. GDXJ, these are your junior gold miners. This is where we saw tens of thousands of options being traded inside GDXJ last Tuesday. We slipped a little bit, but remember, we're building potential. All we need is a spark. And today was definitely a spark for gold stocks and gold. GDX, I'll kind of redraw this to capture the low. So I'll activate the drawing here, but the idea is that what's the potential in GDXJ? 48, 49, 50, 51 is the upside potential in GDXJ. This is the very short term. So again, what goes down hard, normally you'll see bigger bounces. and we'll get deeper retracements. So again, 49, 50, 51 is that target range. As we get there, we'll kind of evaluate. We'll look to see if we continue to see pulses going on behind the scenes that may continue to drive the stock. But at a minimum, playing an upside spread in these particular stocks are ways to be able to buy a lower price call, sell a higher price call, get it on a relatively cheap price, and have a chance to look for 70, 80% gain if we just get back to 50 or 51. These are the type of trades I go through during my sessions, and we're about to launch a program next year, Mastermind, around this strategy. And for those that buy my credits at TheoTRADE, we're actually doing a sneak peek for 6 weeks in Mastermind for free if you buy some credits to be deployed to my classes. In my class, we're going to launch in service next year. So again, a lot of stuff kind of bubbling behind the works here on this front. But again, if you're interested, feel free to call 623-244-5657 and ask for Brandon if you want that first look 6-week mastermind. We're going to be starting after Black Friday to help jumpstart your 2025. But anyway, so there's our slide here. Turn 1 into 2. I use the code word Brandon. That's the number to call. So again, you get double your money. If you pay $1,000, you get $2,000 credit to be deployed. And again, you get the 6-week mastermind coming up next year for, you'll apply those credits to that. You get the 6 weeks for free if you buy at least one credit. Anyway, so that's our video for today. So again, look at the opportunity here in gold. Again, we saw pre-move pulses last week several times and continue today. Looks like gold may have some legs here. We've talked about the targets in GLD, GDXJ, and GDX as opportunities. And we'll catch you back in the next week's video. Have a great one. Thank you.